Hi traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be diving deep into a powerful but often overlooked chart pattern, and that is the diamond pattern. All right, now if you want to spot major market reversals before they happen, then this pattern is a must know pattern. The diamond pattern is a highly effective reversal formation that signals a potential trend shift. It appears after a strong move, creating a broadening formation followed by a tightening range, okay, forming a diamond shape on the chart. All right, so in this video, we're just going to be covering what the diamond pattern is and how it forms. We're also going to be looking at how to identify a strong diamond pattern setup. We're going to be looking at breakout confirmation techniques to avoid false signals, and finally, how to use the diamond pattern in a trading strategy. Okay, so stick around until the end for chart examples and practical trading setups. And don't forget, smash that like button, subscribe to the channel, and turn on notifications so you never miss an update. All right, let us get started. Now, let's just start with the basics. What exactly is the diamond pattern? Now, the diamond pattern is a reversal reversal chart pattern. Sorry, it's not a candlestick pattern, it's a chart pattern. So it's a reversal chart pattern that can appear at the top of an uptrend or at the bottom of a downtrend. Now, it actually forms when price first expands and then contracts, creating a diamond-shaped structure on the chart. So let us just look at how this pattern develops. All right, first of all, you're going to see a broadening formation, okay, because price is first of all going to make higher highs and lower lows. All right, so you're going to notice a formation of, let's see if we can find an example. All right, let's see if we can find an example. You're going to see higher highs and lower lows. Higher highs and lower lows on the chart. Okay, let's see. All right, we can see we have higher highs here, right, and lower lows. Okay, so that is the first step. The price will make higher highs and lower lows, expanding the range. Then you're going to find a tightening formation. Price will now start to make lower highs and higher lows. Price will start to make lower highs and higher lows. Let me just extend this because it got up to this point. Right, so price will start to make lower highs. We can see this. This is lower highs, right? And higher lows. Can we see? We actually have higher lows here. Now, in as much as this is not exactly a perfect diamond shape, yeah, this is not exactly a perfect diamond shape per se, but we can see that this is kind of like a diamond shape, right? So the first the first way to to spot this, or rather the first thing to be looking out for when you want to spot the diamond pattern, is higher highs and higher lows, higher highs and lower lows, sorry, expanding the range. Then you're going to see a tightening formation bounded by lower highs and higher lows, okay, forming a converging range. Then you're going to find the breakout point. The breakout point could be to the downside or to the upside, okay. So once price breaks out of the tightening range, it often leads to a strong trend reversal, and we can see what happened. We actually had a reversal all the way down to this point, okay. So the diamond pattern is important because it reflects market uncertainty. Buyers and sellers are battling for control. Whenever you find the diamond pattern, it means that both buyers and sellers are kind of battling for control. And once one side wins, the breakout direction is confirmed. Okay, now that we know what the diamond pattern is, let's talk about how to spot a strong setup on your chart. Now, it is important to note that it is usually formed after a strong trend. It could be an uptrend or a downtrend. A diamond top, we call this a diamond top because it appears after an uptrend. So a diamond top occurs after an uptrend, while a diamond bottom occurs after a downtrend. All right, then you're going to see clear broadening and contracting price action. Okay, the pattern should start with an expansion, right, followed by a contraction. You can see an example here. You can see it's going to start with an expansion followed by a contraction. So this is a live example that we just had here. Okay, so it doesn't mean that you must always find a perfect shape like this. In some cases you might see some different shapes of a diamond, but it's going to resemble a diamond. The main things to point out is that it starts with an expansion. It starts with higher highs and lower lows, and then suddenly you start having lower highs and higher lows. So long as you have that pattern, then you are good to go. All right, then you have a well-defined support and resistance level. Okay, the edges of the pattern should be clear, forming a diamond-like shape. All right, then you have a breakout direction. It matters a lot. Okay, if price breaks downward from a diamond top, it signals a bearish reversal. On the other hand, if it was a diamond bottom and price breaks above, it signals a bullish reversal. Okay, now a warning: not every diamond shaped pattern on the chart is a valid diamond pattern. Okay, so always look for clear structure and confirmation before making a trade. All right, now one of the biggest mistakes traders make is jumping into every trade too early without proper confirmation. So here's how to confirm a valid breakout. Okay, we have the break and retest strategy. All right, we have the break and retest strategy. Now you have to wait for price to break above resistance or to break below support. All right, so once the breakout has happened, then you wait for a retest of the breakout level. Can we see that in this scenario we had a breakout, right? We had a breakout, and then you can see that we had a retest. You can see that we had a retest of that breakout zone. Can we see that price eventually retested that breakout zone, okay, before coming back down? Now then you also have volume confirmation. It's always important to confirm breakouts with volume. Okay, a strong breakout should be supported by increase in volume. All right, if volume is weak, the breakout could be false. Then you can also use additional indicators. Actually, you can use the relative strength index, you can use moving averages or any other indicator of your choice to confirm your signals. All right, the RSI can confirm overbought and oversold conditions. Okay, the moving averages can confirm the trend direction. Now it is important to always combine diamond pattern with other technical indicators for stronger trade setups. All right, now let's go over a simple strategy to trade the diamond pattern effectively. Okay, your entry strategy: you have to identify a well-formed diamond pattern at the top of an uptrend or at the bottom of a downtrend. Then you wait for a breakout direction. All right, then you look for a retest of the breakout level before entering the trade. Then for your stop loss, you can place your stop loss above the high, the last high, for a bearish setup. Where if it's a bullish setup, of course, it's going to be below the last low. All right, then for your take profit, you can target you can measure the height of the pattern. For example, you can just use your measuring tool, measure the height of the pattern. Right, after measuring the height of the pattern, you can use a similar calculation. For example, we can see that we had about 142, right, of 0.3. Then you can just measure similar. Okay, I can see that we actually had a little more than what we had measured for the pattern. And you can see this even coincided with a significant support zone. So this would have been a great place for taking our profit. Okay, so basically measure the height of the pattern and project that distance from the breakout point to set a target. All right, now before wrapping up, let's just go over some common mistakes traders make when using the diamond pattern. The first is entering before the breakout. The pattern alone is not enough. Okay, so wait for the breakout confirmation before placing a trade. You must always have that breakout confirmation. It is important before placing your trade. Okay, breakout and retest is important. Then the second mistake is ignoring volume. A strong breakout should be supported by increased volume. Okay, you can see that after this breakout happened, just watch out what happened. Look at, can you see that there was an increase in volume around here? Okay, so weak volume can lead to false breakout. All right, so pay attention to the volume. And then finally, Do not ignore market context. The diamond pattern is more reliable in a trending market. Okay, you can see right after an uptrend, we had the formation of a diamond top. After a downtrend, you can usually find the formation of a diamond bottom. So pay attention to a trending market because in ranging conditions, breakouts may fail. Then for the best practice, use multiple confirmations before entering a trade. The more signals aligning with the diamond pattern, the stronger the setup. All right. So that is a wrap, traders. Now you know exactly how to identify, confirm, and trade the diamond pattern like a pro. Have you ever used the diamond pattern in your trading? Drop a comment below and let me know. Okay. If you found this video helpful, hit that like button, subscribe to the channel, and turn on notifications so you never miss a trading tip. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.